it having some form of magenta algorithm here, right? It's important you understand this because this magenta algorithm started showing its form of controlled selling. Now, who wants to control selling? The bulls want to control selling here, right? So at this point here, I was hoping that we had this yellow algorithm that appeared again, the selling algorithm. And this is what it means for the bulls to dig deeper before we take a trade here. Now, if it didn't dig deeper, there is not enough liquidity. And so even though we broke out of that magenta algorithm here, I didn't take a trade. I didn't take a call here, especially when this was early candles. If this broke out, so be it. You have to understand that. Just because we had this large green candle, it doesn't mean that this is going to run away. You can always catch up to it once you see a buying continuation structure, which previously appeared here again, this orange one, right? So when you understand this is a buying continuation. There is a certain algorithm that's buying out here. If this happens, wait for the same controlled algorithm, in this case, the magenta and the yellow, where the bulls were building liquidity before you take a trade again. It's quite straightforward here. So I didn't take a trade here, even though this was an easy breakout here, because I was hoping we had a deeper liquidity. Now, could you have taken this trade? Absolutely. If you took this trade here, you understand on the breakout here, you could take a very micro trade right here, right? You could have your stops. If you wanted to take a call here, you could place your stops at the last wick over here, just below the magenta algorithm here. The danger of taking calls in a controlled selling is this. If the bulls need to build more liquidity, and it's a very simple process, right? Because at the lower price, more people will buy. If you're going to the grocery store, you want to be buying more stuff when it's at a lower price. That's just standard buying behavior. So if there is insufficient liquidity to break out of this, you will see that we will start trending down and you will definitely be triggered. So in the controlled selling, it's not that easy to just determine that your stops be right here. And this is why sometimes it's better to let the market dig deeper and to see a certain bounce. I will show you a bounce later, especially when there is higher volume. Now, in this case here, you could take a trade here if you want to, right? Set your stops here. I would scale down, right? If your usual contracts is 10, for example, I would take maybe 3, 4 here, much less than you usually take because it's obvious there's not much liquidity. And you see the breakout here. Once this green candle appears, I would take all profits. That's what I would do, especially for early candles. Because if this breaks out later, you can always catch up. Or if you want to, for psychology's sake, just take 90% of your profits, leave 10% runners, and at least you have one runner to boost yourself psychologically. That works as well. Now, this is exactly what happened. You see, once we had that, we had a mini breakout, but it didn't go far. Obviously, because there just isn't sufficient liquidity. And it was at this point that another algorithm started to appear because we had rejection here, right? And that was this green algorithm right here, 945, right? And so you see, we had the blue buying continuation. We had that orange, and now we have that green. Now, these are various degrees of buying. Which of this is a stronger buying algorithm? Obviously, it's a steeper one, which is the orange. And you see how the buying algorithm is starting to taper. Now, tapering is a process whereby it starts to get gentler and you see that the buying is starting to weaken. And we started tapering here at number 3. Now, when the tapering algorithm appears, in this case, number 3, you have to remember this is the weakest buying algorithm that you see visibly right now. So when that happens, you can use it as some sort of gauge of the bears taking over control once the bulls lose their buying strength. As simple as that. Now, several ways you can take this trade here. Some more adventurous traders, if you manage to see this early, within 1 minute, you can take the early trade here, right? The break of the orange algorithm. You always realize at the break of algorithms, there will always be larger candles. And that's how it works, because when you break the algorithm, there will be sellers in waiting, because this is a support line. Whenever you break a support line, there will always be a trigger of stop losses. Not many, because this is not a major support line. This is one of the algorithms that you see in the entire picture here. I took a trade at the break of this blue, because firstly, we started tapering quite significantly here. You realize at this level here, once you see the blue here, right, we didn't break out of this yellow 505 right here. Now this is also what you call a wedge, right? There is a wedge here. A better trade, and if the market is kind to us, mostly it's kind to us, but sometimes it's not that much kinder to us, is if we have that orange right here and you see a head forming before we have that stop hunt. Now, when this happens, the head is always a great confirmation because it just means that there will be stop hunt here, and the bears in this case have grabbed more liquidity in order to break out of that algorithm right there. So we don't have that here. We have some some resistance weakness here. 505, you see that weakness right there. Now, at this point here, there is another tapering algorithm, the green, we talked about that, right? So a safe trade is to take it at the break of the green. Yeah, but I took mine here because we started tapering already. There is already tapering right there. So I took a trade here. Very simply, where do you think my stops will be if I took a trade here? Right, if I took my puts here, well, one way is to take your stops where you think right here, maybe half. I would take it at the high of day. So I would maybe cut off half my contracts here. And maybe if I want to, I await for the hit and I set half my stops here as well. That's possible. It's a possible setup. However, if there is no hit there is forming, I usually don't go full contract as well, right? Because there isn't much confirmation. It can always reverse. So in this case, I took about half my contracts, I think. Half, which is about 20. I think I took about 20 contracts here, right? I took 20 contracts here. I was ready to stop completely, right at this level here, right? And we started pushing down. And once we started pushing down to this green algorithm, I've already protected my trade. Now, when you protect a trade, you want to take as much profits as possible so that the profits of the trade that you already took can cover the rest of your stop losses. Or if you're a newer trader, just take all your profits. It's better to be green and you slowly develop that familiarity with the market before you decide to leave runners. That's stage 1 of the ebook. Now, so at this point, you protect your runners once it hits the green algorithm. Why? Because you remember, this is a support line. This is important. You have to understand, you have to take your profits for puts on a support as much as you can. Now, this is when you see we started breaking out and retracing back and rejecting the green algorithm again. Now, when it was a previous support, it can turn into a resistance. And this is a very good example of that happening. And you see how 2 candles caused it to become resistance. A previous support turned into resistance. This is when you can add more runners if you want to. And it goes all the way down here. And what kind of selling is it? It broke down into the selling that is in this yellow selling algorithm right there. Beautiful. Now let's build out the structure again. You see, we started having stronger buying. This buying has weakened into that blue algorithm here, right? So this is known as tapering. We had a very obvious resistance here. And so there is a possible trade setup that you could take here. Beautiful trade if you took it. And you have to protect by the next known level, which is this green algorithm support. Now, if you manage to take all your profits here, you can always reopen them. And you see you had 2 candles to reopen them again because you were sure that there could be some sort of continuation. What continuation was there? It's selling in that yellow algorithm that we previously already figured out. Very simple. And to what level do you take more profits? To the next known support level. Take a look. What's the next known support level here? And that is right, your low of day. So you could have taken profits here on the break here, right? Simple. Your entry could be here. Take profits here. Or your entry could be here on the break of the green. That's exactly what we want. And you take profits off this. Now, once this trade is set up, you took some profits here, you need to wait for continuation. Because apart from low of day, you need to now start planning for your next target. Where next can this go down? And that is why we have that analysis there, right? You see the green algorithm here. You see the green algorithm here. You want to see the cup close, and the cup has closed. Now, when the cup has closed, what's next that you need to look out for? A handle, naturally. Right, and you see the handle, you want to also use the same green algorithm. Now you see the green algorithm building strength, right? But it's not going down. So at this point here, you can only take a trade. Maybe if you had runners, I would take a trade here if I had runners. right? If I had runners that I haven't closed, I would possibly take a trade here and set my stops maybe here, but I will only take very little contracts, right? And wait for the breakout right here and take more, reload here when we break out of the green algorithm. In this case, there isn't enough sellers. Why? Because you see the volume has started reducing. The sellers are just not interested, right? We had strong selling after lowered volume, but this strong selling here, and I'll take a look at this red candle, got us nowhere, right? Not even close to where the green algorithm is. Now, if you're a newer trader, you can avoid looking at volume for now. Just focus on this, very importantly. And you see, very importantly now, although we are paying attention to the bearish algorithms, you have to also look out for the bullish algorithms here. And we identify the bullish algorithms as well, which are the magenta and the yellow. So at this point here, you realize when you dig deeper, that can also dig deeper here, right? You have to pay close attention because we identified already that magenta. We were to go long, you will see how the market will build more strength. And you'll see how on the break of magenta right here, sorry about that, you see the break of magenta here, we see a breakout with higher volume right here because the bulls were building strength to break out here. Now, I wouldn't take a trade here because you have to understand liquidity levels, right? This was the liquidity. This was a chop. You have to understand when you are in a chop, the market was indecisive. The bulls and the bears are stuck at that level. Now, when they are stuck at that level, they either go up or go down once this liquidity is grabbed. So you realize here we have that magenta, right? And we have that yellow there. And I'm looking for a liquidity grab only on the breakout here. If it comes early, the market grabs liquidity, even better, because you want the market, in this case the bulls, to grab liquidity as soon as possible. If the bulls are interested to bringing this up, it will grab it as soon as possible. If that doesn't happen, it means you have to take a longer time. It means it has to build more liquidity. That's why it's taking more time. So when that happens, you look out for a microstructure right here, right? So that's exactly what we're waiting for. Take a look here on the next trade, a microstructure. That's exactly what we are trying to look for. And now you understand why I was looking for a microstructure, because the market took too long to reach the liquidity. When that happens, you wait for microstructure. That happened here, right? And you see how beautiful we broke out of that algorithm with a big, large green candle, because this means that we have grabbed the liquidity here. Now, likewise, if you're taking trades early, there are several entries here you can take from the yellow here. You can see where we started building liquidity, right? You could take out from the break of this yellow. Now, if you took it from here, you are going to be in a world of pain because you will become liquidity at this level. So I wouldn't suggest that. You could take it expecting a handle, right? You could do so. And if it starts to chop here for the next 5-6 candles, by the third candle, if it starts chopping, I would take all my profits, right? No way I'm staying in more than 2 minutes, 3 minutes as liquidity in the order books. You will just become liquidity part of the chop, right? So some of you would take that bounce here, expecting the handle. That's all right. But take profits when we are going nowhere, right? You can always take profits first and wait for the breakout. Don't overstay your welcome. That's what I always say. So at this point, you also realize that we started trending towards the magenta. And this is why in trading, you have to plan for both scenarios. We plan for both scenarios. Whether it goes down, whether it goes up, you know why exactly, because you train your eyes to be looking at the algorithms. As simple as that. So once this breaks out, you could take a trade ready at the breakout here. I would take a trade here. Absolutely possible, right? You take a trade here and you start to protect it at the first green candle. This first green candle is about 0.3 points on SPY. More than enough for you to take profits. It's more than enough. It's probably a 10-20 cents increase in your contract value. If you're playing SPX, it's about as good as a 50-60 cents. If you're taking about 0.3, 0.4 delta, it's good enough. Good enough to protect your trade. Why? Because what you need to be protecting from is your stops. You have to understand your structure and your stops. In this case, if I were to take a trade here, my stops are very simple. I place my stops here, right? So this is my stop and this will be my entry, and I would have protected my trade from here And just take a look. If you're trading the ES, this is a perfect trade. You protect half your profits here. You can never lose any more. This is a trade that's fully protected. You are completely stress-free. That's how you plan your trade, right? Whether you're right or wrong, it doesn't matter because you already have your risk to rewards put in place and you already are set in position for a possible breakout because you understood that there could be a possible structure in place. Now, when that happens again, you prepare for the other breakout here, right? And on the second breakout, you add the contracts that you already sold. You're selling at this price, you're buying back at a lower price.